Hello, my name is Chad Hart. I'm Extension Economist at Iowa State University. It's time for the mid-September update on what we're seeing within the ag markets. Now, with the September reports that come from USDA, what they tend to do is in this month they update us on the acreage that we planted using some data that comes in from the Farm Service Agency. They also update yields based upon not only farmer surveys, but they do an objective yield survey where they go out into the fields and monitor the data. And then they look at um, export progress and how our biofuels industry is working through the crops at the end of the year, at least at the end of the marketing year, to see how demand is shaping up as well. And we did see some sizable adjustments as we're looking at both crops. And in fact, both crop have seen prices decline a little bit after we've got through and digested these reports. So let's walk through what those numbers have indicated. When we're looking at the corn supply and use table, the biggest adjustments were really on the supply as USDA looked at the crops. They found that farmers were able to plant more corn than they originally intended to, and in fact, more than was estimated through the June acreage report. The data from the Farm Service Agency indicated about 800,000 more acres. A lot of that acreage came especially from states surrounding Iowa. Actually, Iowa and Illinois reduced their corn plantings a little bit, but we saw growth in Minnesota and Nebraska and Missouri and uh, um, throughout basically the rest of the Corn Belt. And that ended up adding some significant area there. Now, at the same time, when USDA went out in the fields and looked at the crop, they found the crop was not as healthy as they had once hoped. And so they did end up bringing the yield down a little over a bushel per acre. And so when it was all said and done, the acreage increase was more than the yield decline. And so we actually saw production rise a little bit as we're looking at 2023. So we're still looking at the potential of a 15.1 billion bushel corn crop. So plenty of corn to work with. The other thing is that as USDA looked at least the projections for the 2023 crop, they saw no reason to deviate from what they had previously estimated. So they kept feed, ethanol, food seed, and other exports all the same as what they had from the August update. They did make some adjustments, though, to the 2022 crop. They ended up adjusting ethanol down a little bit and exports up a little bit based upon what they've seen over the past couple of weeks. But when it was all said and done, basically corn supplies here in 2023 moved a little bit higher, and therefore corn ending stocks moved a little bit higher as we look towards the 2023-24 marketing year. So we still see ending stocks of over 2.2 billion bushels out there. That has been weighing down on prices, and USDA season average price is estimated at $4.90. Now, flipping to the soybean table, the idea is what we saw there was very similar in that as USDA looked at the acreage from FSA, they ended up increasing that by about 95,000 acres. So a much smaller adjustment than corn, but still adding to the potential production out there. They also, again, downgraded the yield based upon the drought and the hot conditions that we have seen so far in this early fall season. And so that brings production down to 4.15 billion bushels. So we are looking at a smaller crop than last year and well smaller to the giant crop we had in 2021. So supplies are tightening, but at the same time, what they found was that usage is expected to continue to slow. In fact, while there were no adjustments on the corn side of the usage table, there were plenty for soybeans. They ended up reducing the growth that they're seeing in crush. They brought that down about 10 million bushels. But the biggest cut was again in exports. And as you're looking there across that export line, you can see that that has been a steady down on a steady downbeat basically since the 2020 crop, where we hit a record amount of 2.26 billion bushels exported from the country, back 3 years ago to now. The projection is out of the 2023 crop, we're down below 1.8 billion bushels. So we are continuing to see that export loss as we look out there. When it was all said and done, though, USDA said, the supply shrinkage is a little bit more than the usage shrink. So they do continue to whittle down ending stocks here, now targeted at 220 million bushels. So it's still an incredibly tight market here within the US. But that's not necessarily leading to stronger prices, because when we look at the rest of the world is growing more and more soybeans. The global soybean market is not nearly as tight as the US soybean market. And so when you look down at that season average price, USDA shows that down significantly from 2022, where we were averaging over $14 a bushel, to now we're talking $12.90 a bushel for the 2023 crop. Now, getting into that yield data, what USDA found is that as they went out into the fields this year, I would say their data reflected the potential for stronger yields, but also probably highlights why we're not going to hit those stronger yields necessarily. So this is a graphic that USDA puts together that shows what they found when they went out into the fields. They count the ears per acre, and then for the years where they can, they do get an estimated yield off those ears. So what you see here, the blue bars are those ears per acre, and you can see that the number for September of 2023 is actually the highest we've seen in 5 years, where they're talking about close to 29,500 ears per acre. So bigger than we have seen since basically 2018. So that's reflecting the potential there could be a really big corn crop out there. At the same time, too, though, the red dots on the chart are indicating the yield that they estimate that they get from those ears. And so even though we've got the most ears we've seen in 5 years, we don't necessarily see the same yield potential. And that indicates that the grain fill period has been rough. And USDA is showing that, with their estimates here, that they continue to work this crop smaller because of that. And I would expect that to continue as we look forward in the October report. Now, when it comes to the yields that they found on a statewide basis, the idea is that what we see here in Iowa is that they're basically holding us to what we had last year. We averaged 200 bushels per acre last year. They're saying we can still meet that this year. On the other hand, as you look at the states surrounding us to, let's call it the north, east, and south, you can definitely see a bigger impact due to the dry and hot conditions that we've seen here within the last couple of months of this year. Meanwhile, we do see some improvement along our western front. You look at the Great Plains states, and we do see better corn yields out there this year because the drought basically slid east and impacted us more here in the center part of the Corn Belt as opposed to the western edge. When we're looking for where those better yields are nationwide, not only are they out there in the Great Plains, but you look towards the eastern U.S., and especially in this case, I'll point out Ohio is still on pace to have a record yield this year in terms of corn. But overall, USDA's numbers right now showing us at 173.8 bushels per acre across the nation. That would be better than last year, but we're getting closer, it seems, each and every month to just matching what we saw last year. When you're looking at the soybean crop, they show us similar data, but it doesn't necessarily tell the same story as what we had in corn. Here, the number of pods, I would argue, is compared to the last 5 years about average. So we're not necessarily seeing more pods or less pods than what we've had in the past, but right in the normal range compared over the last 5 years. But then when we look at that yield, the idea is the yield is holding in that same spot as well. And so I would say that the data thus far compares favorably to what we saw last year, but is a little bit behind what we saw either in 2020 or 2021. And with this, USDA has been, again, sort of like with corn, working that yield down each time they look at this crop. Now, when we look at the state yield estimates, here Iowa has taken a step back compared to last year. We're looking at 58 bushels per acre here. You can again see that ring around Iowa to the north, east, and south that is showing those hotter, drier conditions, but you can also see some degradation of the crop, especially as we look at North Dakota. Most of the rest of the plains, though, seeing better soybean yields, and again, we're seeing more record yields out there towards the east and also towards the south as you look down there at Arkansas and Mississippi, showing up with some record yield potential as well. So overall, I'd say the picture is this, is that the USDA's numbers are reflecting that yield potential is still good, but it is slowly declining over time. And I would expect that to continue as we look forward into next month's update on this, because they'll continue to refine these estimates over the next couple of months. Now, that's looking at the supply side. Like I say, we continue to see these crops in terms of yield get smaller, and my guess is production will work its way down a little bit as well over the next couple of months. What I'm worried about is what are we seeing with usage as well? Do we continue to see that shrinkage there? And I mentioned exports on the soybean side has been sort of the challenge, and that continues to be the case here. This is looking at the weekly export sales data, and we just did cross into the beginning of the 2023 marketing year. So you see a few lines on the table here, but you'll also notice there's a red dot over here, about 600 million bushels, that's starting us off for what we've seen at the beginning of this marketing year. And what we're seeing are those lighter international sales. We have been having a significant issue, especially over the last 6 months within the soybean market. And that continues to dog us here today. In fact, as USDA looks forward, they're saying that the 2023 crop year will be the 4th year in a row where we've seen export levels on the soybean side fall. Now, when we're looking at the shifts of who's, buying less, if you will, this coming year compared to last year, what we're seeing in the early data suggests that China is continuing to purchase at very similar pace here. In this case, as you look at the old crop, they were about 60% of our sales. As you're looking new crop right now, they're only 40%, but they also tend to be a large chunk of that unknown out there that's showing up at 38%. A lot of that will slide to the China category, and that's why I believe China's roughly similar to what we saw them buy last year. We've seen a little bit of growth out of Mexico. Where we're seeing the biggest pull back right now is from the European Union. They were about 10% of our sales last year. They're down about 1% of our sales so far this year. And so we'll be looking to see some more growth, because beyond Europe, we're also seeing a little bit of decline as we look at places like Indonesia, Japan, Taiwan, and a lot of our, let's call them smaller markets, have also seen some retreat there as well. You get that as you look at the other category in both of these pie charts. It's 11% last year, only 4% so far this year. Now, when looking at corn exports, USDA is hoping for a bounce back up as they're looking at this marketing year, but right now the data is not supporting that as we're looking right now. Again, as you look at that red dot, look for the red dot here, it's down there about 400 million bushels as we start the marketing year. Roughly, I'll put it very similar to what we had last year, a little bit below it though. The problem is last year we never really got on track and made up any sort of ground in our export pace over the entire year. This year, USDA is hoping that we move that, if you will, the red line that gets drawn this year will be much closer to the black line on this chart, which represents our 5-year average in terms of our export sales. So far, when looking at those sales, we have seen some increases, especially as we look to Mexico, but we've also seen some dramatic pullback from places like China, Japan. We've seen a little bit more of an expansion in Canada. So our, if you will, our nearby partners are buying more, but we're not seeing sales going out beyond North America that much right now. And so export potential is weak right now, and if you will, we're struggling to find a home as we look out there. And because of that, we've seen prices work their way down. Since the report came out, corn markets lost about 10 cents per bushel compared to where it was prior to the September USDA reports. So as we're looking at what the futures market says about pricing for the 2023 and 24 crops, it's brought that down a bit here. Right now, I'd say the futures market is pointing to more like a $4.70 season average cash price for corn. USDA was saying $4.90. So you can definitely see that the futures market is more concerned, if you will, about that export potential and whether we'll be able to realize the growth that USDA is hoping for. Now, as we look out towards 2024, we see those prices building back up, trying to approach $5, which would be on par with our production cost, at least, as we're looking at this year. When I'm looking at the soybean market, the idea is where corn, you could argue the market was more pessimistic. I would say here it's a little more optimistic about the soybean market. USDA is at 12.90. The market's right now at 12.95, and they came down from 13.40 pre-report. So you can see that they are worried about the drag coming from exports, but they're still offering at least a little bit of a pricing bump compared to the USDA estimates. Now, as we look forward to the 2024 crop, you see a step down there, as I believe the market is already pricing in an expectation that acreage will shift to soybeans in 2024, given the relative pricing differences we're seeing here. So that's the update we're seeing, at least right now for the ag markets. The idea is that as we're looking beyond this, USDA will provide us another update in October. They'll provide another update beyond that in November. And so we'll continue to watch as these numbers unfold. With each update, they'll be updating those objective yield surveys. And so we can monitor how that is impacting the yields that are coming down the line. But they'll also give us a more detailed snapshot of what's happening on the demand side. In this case, what I'm especially watching for here is we'll start to watch those weekly export sales numbers roll in, and are those aligning with USDA's year-end numbers? If we are, hopefully USDA will be able to hold the line there. But my fear is right now, at least, especially on the corn side, that we could see that number, the export projections, slide a bit here if we don't see some additional sales come in soon. With that, again, my name is Chad Hart. I'm an extension economist with Iowa State University. Thank you for giving me a few minutes of your time.